There are a couple of things that are going on right now. The first thing, we had a market before where when the earnings would come out, the earnings, if they were good, investors would be rewarding. And we're not seeing that. They're not lackluster earnings at this point, but they're also not hitting it out of the park right now, where investors say, hey, you know what? There's a lot more potential. And a lot of consensus calls by the analysts have been saying, hey, these earnings that came in, they were good, and we believe the stock could go up 20-30% or more, but the investors are just not interested at this point, which leads me to believe that there's some profit taking place here, and at the same time there might be repositioning into other asset classes. So there's a combination of things happening here. It is not a bad sign when this happens. You just have to realize that it is part of an efficient, orderly market. What I see is that it depends on what your focus is. If your focus is, I need to have this money in a year, you might be considering getting out right away, all right, and waiting till the markets have settled down and getting back in at a later point. If your focus is 5 to 10 years, you can absolutely wait, or even better would be to look, what is my new entry point? And that could be pretty exciting too, because you have the potential to make a lot more money that way. And the third part is maybe you're a bit of both, short term, long term. So maybe you're going to get rid of some of the position and hold on to a part of that position. So that if your focus is there, you need to be proactive, you need to be strategic, and you have to think, what is my focus going forward with what's happening? Some people, when they make that rotation into the energy, into other type investment vehicles, they're doing it simply to stem the bleeding. They had the tech stocks, they saw it go down 40, 50, 60 points in some cases, and they said, you know what, this may not be exciting, but I'm not losing 60 points a day, which some stocks, who have been losing that by that amount. So, this is not a question of growth at this point. It's a question of stability, owning stocks that are high quality and that have traditionally fared well in this type of environment. So until that certainty in that sector returns, they have a place to put their money, and that it keeps growing for them, albeit in a slow pace. These are great companies that have been, shall we say, faced with adversity the past few years, GE being one of them. I mean, GE is no longer the company we thought it was. It is a shell of itself. Does that mean that they may not go and make acquisitions to make them more formidable or go into technologies that we hadn't thought of? They've done that before. GM, another company, they're getting into the electric game. They know what the future is. So are they going to make some strategic acquisitions at this point? I absolutely believe they will. So once again, these companies, solid, stable. I wouldn't sink a ton of money into these companies at this particular point, but I would pick and choose the type of high quality brands that can keep your money safe for the moment, and then start looking when to get back into the growth stocks. There are gamblers everywhere. And I used to have a saying 25 years ago. I would say to people, listen, you want to gamble? Go to Atlantic City or go to Vegas, have fun there and know that you're going to lose a certain portion of your money. When you go into Bitcoin, yes, this is a new asset class, but you also have to go with the caveat, there is a lot of risk here. But maybe not putting the whole thing. Yeah, there is no instant gratification in the stock market in some cases. But over the long term, it has done very well for investing. In the Bitcoin arena and all the, Dogecoin and the like, there's plenty of opportunity for the moment, and maybe a small amount can go in there, but not a huge amount where, I know a gentleman, he sank his house savings into it, and he did very well for the moment, but then it had that sell off. He could not handle the volatility. If you can't handle the volatility, you're going to have your plate handed back to you at some point. So you have to be able to handle the risk, and you have to be able to say to yourself, what's my limit? When do I get out? Because this isn't a long-term thing just yet. It might very well become that at some point, but not just yet. At any given point, interest rates are going to start going up again. We tend to think that it's about 2 years away, but could it start to creep up little by little, where the Fed's going to have to respond within 6 months? Who knows? But there's a very good chance that it is. So she is giving us a prelude into what could be in the next year or so, which I believe is a foregone conclusion, that interest rates will go up, that you must prepare your portfolios accordingly, and that you're going to be okay, because it's not going to be this dramatic shit. We are not going up to 13%. This isn't the 80s. All right. We might go up to 3-4% at the most in that time frame, in that 2-3 year time frame. But that's okay. People have made money during those times as well. And people made money during those 13-14% time frame as well. So once again, keep your cool, measure your risk, and act accordingly when those events start to happen. Right now is not the time to be thinking of inflation, in my opinion. There's still a lot of growth left in this market, and you're going to do well by staying disciplined and staying strategic.